Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So last week we mostly were following onto our trading plan, suggested that around 1820 and 1825 area should be some interesting steps for taking the short position, because potentially that was the level where market could turn down, as we have on the weekly and monthly chart. Strong bearish pattern, and tells that sooner rather than later, but some downside continuation of this miserable plunge should start. And in general, you could see that this level, it's done its job pretty nice. Market was not able to break it, and multiple bearish setups were forming there, and few of them we have tried to use, and every time it has led to some meaningful pullback. At least approximately $10–15 of the pullback were stemming from this area. At the same time, you could see that all of these scenarios and the setups that we were using hasn't led to the major reversal. So they have triggered some minor pullbacks, but market keeps standing right below this area, trying to break it up and forming some consolidation around it. So based on this price behavior, it seems that next week we will play the same game. So first we will keep an eye on the same 1820, 1825 area, as market hasn't broken it yet. But potentially, taking a look at this in a broad opinion, broad view, this game is calling as, I guess, the reversal point, because with this upper direction, reversal might start from any of the fib levels that stands inside of the major downside swing. Usually this is 30%, 50% levels, and that particular levels that we intend to keep an eye on coming week. So we have said everything about this level. Now let's take a look what we have slightly higher. This is 1833, 1835. This is 50% resistance, and compared to the previous week, if last and previous week, you could see that this level was accompanied by daily overbought. And that's why we said that's, well, relatively safe. Any attempt to go short, it's because market very rare occasionally breaks the overbought area. So every time when it tested it, it usually showed the pullback. But this week you could see that overbought moves slightly higher and comes to the 1825 area, and it stands more in agreement with next fib level. Additionally, as you know, guys, I am never talking about the moving average, and do not use it in my analysis. So never I feel some discomfort when I do not use them. But on the gold market, it seems this is very hot topic, as analysis of the big banks usually mention 50 days, 200 days moving average, golden cross, deadly cross, and this week it is very comfortable situation, very suitable situation to use this moving average, because it will be really very important for other market participants, especially of the big banks who are watching for them. Because take a look at this week, on the coming week, these two moving averages will stand very close to each other and agrees with the daily overbought area. That's why for taking of the short position, this makes this level very comfortable. With the placing stops somewhere above this area, it will be really big chances to not get lost and don't be washed out by the price action. It's getting some response out from this level. Currently, it is not the fact yet that market definitely will reach this area, but in the case if this will happen, we definitely will think about taking the short position here, because even on intraday charts we could get healthy pullback out from there, maybe for again $15–20, and that will be a very good result for intraday trading. So that's approximately 2 moments for our trading plan in the coming week. First, in the beginning of the week, we keep watching for this level because market's still coiling around it, and it still exists chances that maybe market will not proceed higher. If still we will see upward continuation, the next level that we will be watching for is around 1833, 1835. Now let's go back with this fib level. Currently, despite some upward activity on Friday, you can see that on the 4-time frame chart, market still stands in the same consolidation, so you could call it as a flag pattern maybe, but some upward channel here as market stands, and it still can't break the major resistance, 1814, 1820 area, so it's still trying to do this, but it was not successful. And on Friday, take a look, we've got on the close the grabber pattern. I already talked about the grabbers that were formed at the last trading hours of the week. In particular speaking, it was the previous week. And I said they are not very reliable because appearing of this grabber could be just technical, because market do not have more time to cancel this grabber, and grabber becomes a result of the just price closing. But at the same time, if on Monday this grabber will survive and it will be valid, that might be very important to us, because with the pattern that we have on the hourly chart, it could create, well, not bad context to consider taking the short position again. So just take a look. Then here we have grabber, and on the hourly chart we already have in place largest triple to sell pattern. In general, as you can see, gold is really the fan of the triple two patterns. In the last 5 sessions we've got 3 patterns. If you remember, the first one that we have started with is largest triple to sell here when we have taken the short position. Once the ABCD retracement has been completed, we've got largest triple to buy. It also shows good result. And now again we have the largest triple to sell. But this time, if we will get good, if we will get the grabber on the 4-time frame chart together with this triple two, it could get and form nice bearish setup. And what is even more pleasant with this setup is that, well, we do not need to risk too much, because our invalidation point will be just above this area, because this will be invalidation point of the grabber, and that simultaneously will be invalidation point of the triple two, because it has to turn down, or in the case of the upward continuation, we will not consider taking any short position anymore with this area, and just will be watching for reaching XOP around 1820. So that's what we start on Monday. If on Monday grabber will be erased and market will appear above this area, it means that we just ignore this setup and watching for what will happen. So that being said, we're starting from these patterns. If pattern will not work or will be broken right on Monday, next level that we are watching for will be XOP, 1820, and completion of the target on the 4-time frame chart, ultimate target of the butterfly around 1822. Then we are watching what pattern here will be. Maybe it will be hand and shoulders might be formed here that will trigger the reversal. So we start to watching the bearish patterns here as well. In a case, if no patterns will be formed, the market just keep going higher, by the end of the week we are shifting to this scenario on a daily, taking no short positions and watching what will happen around 1830, 1835. That's approximately the strategies that we intend to keep on next week.